Novo Nordisk is down almost 2/3 of its price since a year ago. And now I have bought it. It's sitting around 8% in my portfolio here, which is public. All of my trades are public. You can see exactly what I own, what I have sold, what I have bought. But today, I want to talk to you about Novo Nordisk and why I bought it. We're going to take a look at the numbers and yeah, we're going to try to make sense if this is a good buy. What do I mean by that? Uh, I recommend to anyone that's trying to invest their money into the stock market to stay away from individual stock investments. Just buy the market, buy indexes, buy ETFs if you like. But it's very hard for you to outperform the market, and it's very easy to lose money if you don't know what you're doing. So I always try to warn people that individual stock trading is very risky in the sense that you end up out underperforming the S&P 500 for years, and then it does hurt you financially quite a bit when you haven't made any money over 3, 4, 5 years, and you take a look at the market and it's been going up and up and up, and you keep falling behind and you don't know why. So I recommend most people to just invest in the market. But for people who want to learn how to try to outperform the market, nothing is sure but you can try and learn, you can try and make a strategy, and that's why I'm making these videos, to teach people how I did it, how I created my strategy. But yeah, today we're gonna take a look at Novo Nordisk. So let's just take a look at the graph first. What do we see here? So went up a lot 2020 until 2021, and then it formed the base here for more than a year. August 2021, September 23, 2022. So more than a year, it's been trading flat at around this price level. So around $50, 53, 48, 47. So keep that in mind, that it has a lot of action at this price level. It had a lot of price action. No, I wouldn't say action. It did not move much around this level. There weren't buyers, but people haven't sold their stock at this level either. So, and then they came out with their weight loss drugs. They were first to market. The stock price got pumped a lot. They went from around 200 billion to more than $600 billion stock, which is a lot for, first of all, for a European stock, and also it's a lot for any mature company. This is not a biotech stock. This is a drug manufacturer. It's mostly a drug manufacturer company, but it does have strong biotechnology traits. So let's just take, first of all, on Google Finance, this shows up as being a 162 billion US dollar stock, which is not correct. It's around 215 right now. So that's quite a difference. But the dividend yield is correct. It is 3.4%. While on stock analysis, it shows the correct market cap, but the dividend yield is not the correct one. It is 3.4%. So whenever I make an investment, I try to decide what type of an investment it is. Is it a turnaround play? Is it a final falling knife? Is it a defensive stock? Is it a risk high growth stock? What type of investment is it? So we're investing into a falling knife, into a company that is quite defensive. The dividend yield is pretty safe. It's not going to be cut anytime soon. If we take a look here at payout ratio, we can see that trailing 12 months, they are paying out around 35% of their free cash flow as dividends. They have been a lot higher in the past, but they have becoming more and more profitable. So their payout percentage has been going down, which is a good sign. But there is something not good that I will show you quite in a moment. Let's just go to the income statement. Let's just take a look at the revenue first. What do we see here? Flatlining for many years. Smaller acceleration 2019 to 2020. Big increase in 2021. Then I think in 2022 is when they came to market with the weight loss drugs. So I'm not sure if 2021 stats is affected by that drug. It's not that I don't really care, to be honest. I expect a very high quality company to come out occasionally with a new product that is gonna be profitable for them. So this is nothing out of the ordinary. And then the stock price is gonna get pumped. Of course, it's gonna get hyped a bit. But yeah, as you can see, let's take a look at quarterlies. Do we see any crazy trends? No, just going up over time and accelerating last few years quite a bit. It's not exponential growth, it's just much higher growth than it had before. The only thing I'm interested in is are they able to maintain this type of revenue? I don't even care if they are growing this revenue, because first of all, price to earnings is around 14 right now. Forward P is less than 13, while paying a more than 3% dividend. So this is already looking great for me. All I care about for them right now is not to have a revenue drop, and also profit, of course. Gross profit. So this is millions DKK, which is Danish kroner. Keep that in mind. This is not USD. This is not $300 billion. This is much less. But it doesn't really matter what currency you're looking at. We want to take a look at percentages. Net income growth. So it's not a stable growing company. I wouldn't say it's super cyclical either, but it's just, yeah, it does have some kind of ups and downs to it for sure. Shares change. Let's see what's been happening here. Around 10 years ago, it was doing around 2% each year. Keep in mind, this is a European company. The European companies usually like to pay out dividends with their free cash flow instead of buying back stock. And they've been buying less and less in terms of percentages because probably because of the valuation going up, and they were able to buy much less shares with the money that were allocated for buybacks. Let's take a look at the margins. So gross margins pretty much flat. 10 years ago, 85%. Today, 84%. Nothing changing. There's no trending down, no deterioration. Last year, it was 85% when the company was falling. So I love to see this. I love to see falling price, abrupt fall in price, while the company maintains margins, operating margins, 48%. If it's gonna fall, it's gonna be like it went from 43 down to, I don't know, 42, 41. Let's say 48. I would expect, let's just say around 45, 44% from what I see here, if it's gonna start deteriorating. So this has been a high quality company for most of its life. I wouldn't say most of its life, last 2 decades for sure. Very high margins last 10 years across the board. I mean, if you showed me these margins, I would say this is maybe one of my software picks, like Adobe or something like that, or maybe Nvidia. Not even Nvidia has these type of margins. Not even other drug manufacturers, to be honest with you. We're going to take a look and compare, because comparing also is very important whenever you're trying to make a decision. Free cash flow margins, a bit of variance here, but not anything too crazy. What I don't like, I won't say I severely dislike it or anything like that, but I do not like it when companies find a new source of revenue which brings quite a bit more profit than it had in the last few years, and then what they decide to do is raise the dividend up by a lot. So dividend share, 5 years ago it was 4.55 DKK per share, I think. Today it's paying out 11.4, more than double. Is it more? Yeah, more than double. Actually, almost fucking. This is bad. Okay, whenever I see this, I mean, you didn't have to just rush out of the gate and just throw money to shareholders. Yeah, just take it all, because I guess European countries don't really care about cutting dividends either. They don't care about maintaining the same dividend payout. But yeah, it's still bad. why not just take it slow? And in case you're not going to receive the same amount of money, I mean, you're not sure if that's going to continue forever. A lot of companies in 2020 and 2021, they got pumped a lot because with cash, because people received money from the government. They stayed at home and they thought, yeah, this trend is going to continue forever, until it did not. And then a lot of companies got in trouble because of that, because they, I don't know, they made bad decisions based on the stupid thought of them getting the same money and having the same growth that they had 1 year or 2 years. So yeah, it had a lot of growth in the last few years, Novo Nordisk, with this new product that they came to market with, but rushing to raise the dividend so fast and so high is not a good idea. I don't like to see this. This usually gets companies into trouble, but it's not a problem because, as we saw before, payout ratio is only 35%. So let's just take a look at some other stuff. Yeah, let's take a look at the balance sheet. Cash and cash equivalents, all-time high. Of course, they have a lot of cash in the bank because they have been receiving a lot more in profit. Total liabilities also going up by a lot. Current liabilities, yeah, going up a lot. Shareholder equity going up by a lot, but then last 12 months, trailing 12 months, is gone down a bit. Nothing that would worry me. It's not something I dislike. It's just something that I like to look at. It's happened before right here. I mean, you can barely see it. Gone down from 47 billion to 45. It's not a reason to say, oh yeah, we need to sell everything, and yeah, the price is justified going down by more than 2/3, almost 2/3, not more. Net cash debt, it did go into debt last year, which is not something I like. I hate to see this. This is exactly what I was talking about. Why raise the dividend so much when you can just choose not to raise the dividend and not to borrow money? Because clearly you have the need for this type of cash. You borrowed it. Now you're in debt. It's so stupid. I mean, it's ridiculous. I don't know. I hate it. So total debt has ballooned. 2020, it was 10 billion. Now it's 120 billion. This is so stupid. This is the problem with European companies. The management is not so smart. I mean, they just replaced the CEO because the last one, I think, kind of failed in the US market. And the new CEO is some kind of guy that was a receptionist or something like that, which is ridiculous. Usually, European companies have much lower quality management than United States companies. I wouldn't say the management is completely stupid or anything like that, but just compared to the US overall, I would say yes, they're making bad decisions much more frequently than US companies, and yeah, something to keep in mind. That's why I don't really like to invest in European companies unless they're in some tech sector, tech industry like semiconductors, ASML, and stuff like that. I definitely look into them, but anything else I try to stay away. Let's just take a look at net income. It's exactly what we expect. Revenue goes up by a lot. Net income also goes up by a lot. Stock-based compensation is not a lot. I mean, $2 billion compared to the net income of 104. Now, this is a positive when it comes to European stocks, is that they don't have this culture of tipping, of yeah, we don't tip here at the restaurant very much. And the companies, I don't know, I just see it as something related to the philosophy of the people. They just don't like to tip. You just come and work, you get your salary. We're not gonna give you bribes, or we're not gonna the management is not gonna pay itself whatever it decides. If the CEO and management says, yeah, let's just give ourselves a lot more money than we do to the shareholders, so we can siphon money into our own pockets. This is a very good aspect about European stocks. Stock-based compensation is very low. So that's what I like to see. Common dividends. 2017, a few years ago, 19 billion of Danish kroners. Today it's at 50 billion. Okay. 3 years ago it was at 25. So it's doubled. Is it sustainable? I think for now, yes. They're not in trouble, but I think they can also cut it. I wouldn't be super mad. If they cut it, it would be like a shave. It wouldn't be anything drastic. It wouldn't be suspending the dividend. Nothing crazy like that. They're still making a lot of money from the weight loss drugs in the United States. It's not like they lost all of the revenue. But when you take a look at the price, at the share price, it did lost all of the gains since 2022. So that's why it's a very interesting opportunity. And that's why I bought it. And it's now sitting at on fourth position in my portfolio. Repurchases, let's just take a look here. 10 years ago, 17 billion. Today, 18 billion. See, I think this is just stupid. Again, management doing a lot of stupid stuff. Buying more shares when everything is expensive. Look at this. Accelerating repurchasing of stock. $30 billion wasted. Which is not a lot. This is not US dollars, but so don't think that, oh yeah, they bought back $30 billion and the company now has a market cap of 200. No, this is another currency. I'll show you right in a moment the percentages, but keep in mind that 2023, it was the highest amount that they purchased. And today it's lower than a few years ago. So this is not something I like. A smart management would buy back shares, buy less shares when the stock price is very high, when the company is overvalued, and buy more shares when the stock price is in the toilet. Okay. So again, let's take a look at percentages, how much they have been buying back. Around 2%, about 10 years ago, 2%, and then they dropped to 1.6, 1.5, 1.3, bought back around 1% in 2023, and the stock price was, yeah, it was much higher than it is right now. It was more than double. So, yeah, I just don't like to see this. A lot of the companies that I'm invested in, the management is usually what I consider a smart management is people who realize that their share prices are either overvalued or undervalued, and whatever they allocate for share buybacks, they're not just gonna buy it back when the price is at all-time high. They don't do it automatically. They do it whenever the share price is going down. So it offers a real floor to the stock price dropping. But anyway, this is kind of a floor. This does help, even though it's less than 1%. As of right now, they will be able to buy back more than 1% per year because the share price is in the toilet and it's cheap to buy it now. It's very cheap. The valuation is very low. Which, by the way, let's take a look at valuation right now. Market cap, as we see, this is in USD now. 136, 2019, after Corona, 162 Corona pump. Always keep in mind the Corona pump. 256, and now we're less than that. So yeah, I love to see this. Goes up by a lot, high quality company, goes down by a lot. Now there's an opportunity. Look at this. Minus 16, minus 47 current year. This is exactly the type of situation that I look for when investing in individual stocks trying to outperform the market. Buying companies that have been going down by a lot, buying them very low. I buy low and I sell high. That's what I try to do. So when the share price was very high, trading at a PE of 38 a few years back, I wouldn't have bought it, even though the margins were extremely high and was very good. This was a very high quality company even 10 years ago. But I just didn't like the valuation. I like to have a very large margin of safety. That's why I hit a lot of bottoms when I buy stocks, because when it gets more and more and more interesting and more attractive, that's when I say, okay, I'm gonna buy it now. The price is getting ridiculous and it's dirt cheap. it's people handing me out money, so it's time to take the money. Okay, so when it goes from 38 p down to 14, this is a massive crash in valuation. Price to sales 5. This is a very high quality drug manufacturer. The valuations, you would think that it's some kind of, I don't know, very mature non-growth with low margin type of company, but it's not. Price to book 10. Always compare to where it was in the past, and we're gonna compare it to something like Eli Lilly. I'm not sure how much. I don't want to take like 40 or 50 minutes with the stock analysis, but always try to compare to other stocks in the exact industry, not the whole sector. Don't go and look at biotech or, I don't know, medical devices when you're dealing with just a drug manufacturer. So enterprise value to sales is at 5. It was more than 13 2023 before it started to drop. So this is looking very nice. Everything EV to EBITDA 10 in the toilet. Yeah, lowest it's been in the last 10 years. So everything, it seems to be very ripe for a buy. I might even add more, like I said. But I'm undecided. I have some unallocated capital, and I have been buying United Health as well. It's sitting around 3% of my portfolio right now, and I have 1.2% to allocate. So I might put it into United Health, and I'll make a video about it as well. But yeah, let's just take a look at on return on capital. Return on capital invested 48%. It was higher in the past. This is not a real deterioration. I think this is quite high as well. And it has been maintaining around 40%, 15%, which is crazy. This is extremely high return on capital. Combined with top line growth, I mean, this is, I don't think the share price is going to stay much longer for at where it is right now. Return on capital employed. This is a Charlie Munger favorite stat to use. I learned to use this from Terry Smith as well. And yeah, it's also very high. It's extremely high. I mean, we're talking about some type of super profitable software company. FCF yield. Whenever it comes to valuation, I always take FCF yield as my main indicator. FCF yield, price to earnings, forward price to earnings, EV to EBITDA. I do take some other metrics into account, but I always take free cash flow yield, and I compare it to the S&P 500. I also compare it to the past of the company. So it got to a high of 6.5% back in 2016, and a low of 2.6%. So it never got super expensive. I think it got in line with the market, and now I think it's very cheap compared to the market. The market, I think it's less than 3%, 2.8 or something like that today. I haven't checked, but usually the S&P 500 hovers around 3%, obviously whenever it doesn't crash. So whenever it has a PE ratio of 20 or more, it's usually around 3% or less. So here, FCF yield of almost double the S&P 500. This is a very high margin of safety for me, so that's why I bought it for more than 8% of my portfolio. Dividend yield, this is not correct, like we talked about. This is around 3.4%, which is another very good aspect to consider whenever you invest in a market that's sitting at all-time highs. Having defensive stocks in your portfolio, I think, is pretty important. I mean, take a look at this. We're at all-time high. After quite a massive pump, we're talking about 25% since the bottom. But yeah, I want to have defensive stocks like Novo Nordisk that pay me a dividend. The payout ratio is sitting at 35%, which is not a lot. It can grow and grow and grow, and they're not going to cut the dividend anytime soon. Yeah, so this was it. I wanted to take a look at the competitors, just to compare a bit with the competition here in drug manufacturer general. Eli Lilly is the biggest company. Let's just take a look at the price. It did get pumped a lot as well, just like Novo Nordisk, but this is an American company, so P ratio of 60, forward P of 30. It had a lot more success than Novo Nordisk, so that's why it's been flatlining and it's not been dropping like Novo Nordisk did. So revenues, as you can see here, pretty much in line with Novo Nordisk. But I want to take a look at the margins and let's see if we can indicators. Let's put in the margins here. Let's take a look and compare return on invested capital and capital employed. So as we can see here, where is Novo Nordisk? 84%. It is the highest from this list. Highest, maybe some other is higher, but no, from what I see here, no. AstraZeneca is coming close, and Eli Lilly is also coming very close. Operating margin 41%, Novo Nordisk 48%, also very nice. And the others around here, 25, Johnson & Johnson 25. But Johnson & Johnson, yeah, it's a very mature company and it has a lot of other things going on. AbbVie 33%, profit margin 6%. I don't know if AbbVie is on some kind of dip when it comes to profits or anything like that. I haven't looked, but yeah, Eli Lilly, the biggest in market cap right now, is at 22%. Novo Nordisk 24%, much better. FCF margin 7%. Novo Nordisk 27%. Novartis is quite a bit bigger here, 35%, and some others. Amgen, Gilead Science. ROIC, let's take a look. I mean, we see low teens, mid-teens. Eli Lilly with 27%. Guess what? Novo Nordisk, 48%. So we're buying a very high quality companies, a very high quality company that is high quality in general when comparing to the S&P, but even compared to its peers, this is a top dog. This is the top dog. Maybe it was number one in market cap before it dropped, but let's just put valuation here as well so we can compare price to earnings, P ratio, FCF yield. P ratio 62, 18, 93, 14. AstraZeneca, another European country, much lower valued. Novartis 17, Novo Nordisk 14. So are we getting it super dirt cheap compared to Eli Lilly? Yes, we do. FCF yield, Eli Lilly extremely expensive. I mean, this is almost like Palantir. Like, let's take a look. Like this ridiculous bubble is at 0.4 or something like that. FCF yield, yeah, 0.45. Eli Lilly, 0.5, which is, yeah, I would not like to be owning Eli Lilly right now. It's extremely expensive, and yeah, it's not like it's just gonna grow into this valuation in the next few years. It's gonna probably crash soon enough, or it's just gonna go sideways for like 2 or 3 years, which is yeah, another risk of underperforming the market whenever you're buying at the ridiculous prices. But this is not a ridiculous price at all. This is a very good price to buy it at. Novartis, let's take a look what's going on here. 8% FCF yield. This also looks interesting. Forward P 12. Very interesting. I'm gonna take a look separately, but into this company. Maybe I will make a video about it, but it's getting cheaper and cheaper and cheaper. FCF yield. Dividend yield also paying. Total shareholder returns are quite high. 7%, 8%, 6%. I just want to see what type of price we are getting it at. Yeah, not bad. The price action is not bad. Buying it here, I wouldn't buy it. But if it dips like it did here, from 120 down to 97, I would say if the dividend yield goes over 3%, it might be an interesting buy. But yeah, anyway, let's go back to this list. So this is why I bought it. always remember, ignore the news, okay? The news will pump up the price and the news will bring the price down. This is where the opportunity is created, okay? News, fear, greed. The markets work on fear and greed. The fear of people, it's very hard to comprehend, but if you if you take a look, if you start to try to analyze the fear of people that run financial organizations and the greed that they have and the massive amount of fear that they feel in their bones whenever it comes to losing money, then you will understand why the prices fall extremely like this. When Novo Nordisk has come to the market with a new product, and it's not like it disappeared completely. Even that was the case. What changed? Let's say they brought in this hyper profitable new product, and then they completely lost it. So what? The price is now the same that it was a few years back, and it's more attractive to buy it now because the fundamentals have been improving. They have been buying back shares, and it's a much better buy right now than it was a few years ago. But no, you have to take into account that they are still selling these weight loss products in America and all over the world. So they are still printing money with that new product that they brought a few years back. But the price is in the toilet. The price is lower than it was a few years back. This creates a massive opportunity. This is when I buy low in the toilet, and then I make a high return, and then I sell it, okay? And I am being paid while I wait. So I'm being paid more than 3% dividend yield while I wait to outperform the market. So everything has to be accounted for, okay? The market is at all-time high. This is a defensive stock. The stock price is in the toilet. This is not a company that will go bankrupt anytime soon. This is a very, very high-quality company. There are no problems, okay? They took on a lot of debt, but it's not. It's 100 billion of Danish kroner. It's like $20 billion, not even that. DKK to US dollar, let's say 118. They had around 118 billion. Yeah, it's like $18 billion. It's like not even 10% of the market cap. It's nothing, okay? So, yeah, I don't see any major problems with this company. There are some things that I dislike, such as the dividend increase that they have done last few years, and also the stupid management of the European companies. I'm not saying that Novo Nordisk has stupid management, but in general, it's a management. European companies have lower quality management than US companies have. But yeah, anyway, I think that was it. I'm gonna end it here, and good luck finding stocks to invest in and be profitable. Always take care, and always keep in mind, do not go outside the S&P 500 if you want to stay safe. Only invest when you have a good strategy and setup strategy, and strategy made by advice from very successful people that have proven themselves over a long period of time, such as Warren Buffett, Howard Marks, Charlie Munger. I don't know. There's a lot of people you can listen to. Just don't listen to random people talking about the news on YouTube. It's so stupid. Stay away from anything news related when it comes to the stock market and individual stocks and the prices. Always look at the fundamentals. Always look at the whole industry. Try to compare. Try to make sense. Try to look at the cyclicality. Don't just read the news and say, "Oh yeah, it's not a good investment," because I don't know what's going on. There are some fears. Some people are fearful about this and this and that, so it makes sense to me, and I'm now also fearful. No, that's stupid. You make money when others are fearful, okay? What does Warren Buffett say? Buy when others are fearful. There are a lot of saying like that. When there's blood in the streets, that's when you come out, guns blazing and buying up everything, okay? Anyway, you get the point.